the Asian Development Bank has raised India's GDP growth forecast for the current fiscal year to 7% from 6.7% earlier. Now, the ADB says robust growth will be driven by public as well as private sector investment demand and gradual improvement in consumer demand. The revised figure have come to light in ADB's April edition of the Asian Development Outlook. However, the growth estimate for 24-25 fiscal year is lower than the 7.6% projected for 22-23. The ADB noted that the Indian economy grew remarkably in 22-23 fiscal year with strong momentum in manufacturing as well as services. This growth is expected to continue over the forecast horizon, though it will moderate this year as well as next fiscal year. Now, for 25-26 specifically, the ADB has projected India's growth at 7.2%. The bank also stated that exports are likely to be a relatively muted affair in the current fiscal year. However, also revising India's growth forecast in line with other ratings agencies to 7%, also in line with what RBI estimates, 7% growth for financial year 25.
Absolutely. So I think for once we have the RBI's projection and one multinational bank, multilateral development bank's rating coming or projection coming at exactly the same clip, which is 7%. However, I think it seems that even RBI's projection is a little on the lower side, because if numbers for FY24 stand as they are right now, we are definitely looking at overall annual growth of over 8% for the year gone by. Now, growth at 7% on top of that means that you are actually looking at real growth. If you look at inflation as well as the consumer price growth on, the figures, the headline inflation that comes, add to that the real growth, you're looking at a comfortable double-digit growth for India. Now, all these revisions, all these projections are coming pretty much, back to back. You also had the World Bank last week, I think on the 2nd or 3rd of April, come out with its own revision by about 20 basis points, taking it up to about 6.6% from 6.4% earlier. You've also got other rating agencies like CRISIL, like, Morgan Stanley. All of them are coming with their own revised projections, and all of them are revising their projections upwards. So I think the trend to note here is that while it could be 7%, it could be 20 basis points up or down, it could be maybe as much as a percentage lower or higher when the year eventually ends. I think the trend to note is that all revisions which are coming, revised estimates which are coming from multilateral development banks as well as rating agencies as well as global banks, it's all suggesting that there is an upwardly revision for India's growth. Absolutely. And all of this coming at a time when the world is not growing as fast as India is.
Right. And I'm more interested in the commentary that is coming in from all the ratings agencies and the banks, as opposed to just a figure of 7.7% or 7% and upward, and that is that consumer demand is only going to grow in India. But there's also some sort of fear on the export side as we see political economies around the world juggling with two frontal wars at this point in time, disrupting, of course, trade in major economies. That could be of concern to India.
No doubt about that, and exactly that is the same commentary which is coming from the ADB as well. So ADB has revised it upwards on the basis of 2 or 3 very critical factors. One, of course, is that the centre as well as state governments are going to continue to pump in capital expenditure into infrastructure development. So that is one big chunk of India's overall GDP growth, and this is the investments which the government is making, right? And this is physical investment through infrastructure. Next in line, what ADB is confident about is the services export of India. Now, remember, there were theories last year, and in fact many of them continue to be this year around, and in fact we will hear more commentary because TCS is going to announce its Q4 earnings later today, and the entire IT pack is now going to come out with their own growth projections for next year. But it seems that perhaps there's been some softening of of the horror stories around India's IT exports, and this is coming in line with the kind of growth that we are seeing in the US and the kind of numbers which are coming both in terms of inflation softening as well as employment increasing. So these are making a case against the potential, commentary of a rate cut in the US. So there is no merit really left for a rate cut, and hence a higher for even longer narrative could play out in the US. And if employment data is showing that there is growth, and if inflation is not as sticky as it once was, that means discretionary spending by companies in the US could kickstart again, and that could mean better business for Indian IT companies. So this is the second point that the ADB is making. The third point is, of course, consumption. So the consumption climate seems to be good. About 55 to 56% of India's GDP comes from domestic consumption. So domestic consumption plus services exports plus the capital investments
Higher
that we will
capital.
see both from the private sector and the government sector will help India's GDP grow. But then there are certain risks also to this outlook. And the risk obviously includes the weather, the climate outlook, right? So if we don't have a normal monsoon, and that's exactly what RBI Governor Shaktikanta Das also
Absolutely.
mentioned at the MPC, if we don't have favorable monsoon, then inflation could become a dampener once again for India. Add to that, like you mentioned, 2 wars on in the world, and let's hope it continues at only 2, and if anything only reduces from 2 to 1 and 1 to 0, because supply chain shocks is another risk which ADB has factored in, which could slow down India's growth. And linked to this obviously is the crude shock as well. So if oil prices continue to rise like they have risen in the last 1 month or so, then this could spell trouble for India's growth outlook.
All right, so multiple factors that will be weighing in as far as India's growth trajectory for the upcoming couple of quarters is concerned. But the growth forecast remains intact, only upwardly revised by various banks as well as ratings agency to the tune of about 7% for FY25.